Are you sick of the biggest lie in investing? You've been told over and over that you have to choose. Do you want cash in your pocket right now, or do you want your account to explode in value for the future? It's an impossible choice. It's like saying you can have a race car with no gas, or a full tank in a car that can't drive. You either get a fund that pays you a ton, but your investment goes nowhere, or you get a growth fund that looks incredible, but you can't use any of that money to actually live. If you could have both. In this video, I am giving you the 5 ETF combo for a perfectly balanced portfolio. This is a strategy that gives you insane income and massive growth to secure your financial future. We're using real, up-to-date numbers to build a plan you can literally start using today. Just a super quick disclaimer, this is all to make you smarter, it's not financial advice. Yields and numbers change, so do your own research. Alright, let's do this. The secret blueprint, income rockets and growth juggernauts. Okay, this is the secret sauce. We're not just picking 5 random ETFs, we are building a machine with 2 very specific jobs. First, we have our income rockets. These are the absolute workhorses of the portfolio. Their only job is to print as much cash as possible and send it to you every single month. We're using some crazy ETFs with a covered call trick to supercharge their payouts into the stratosphere. Think of these as the engine, pumping out cash month after month. Second, we have our growth juggernauts. These funds are built for one thing: getting bigger. The share price grows, and the dividend you get paid grows with it. They might start with a smaller payout, but this is how you don't just beat inflation, you leave it in the dust. When you mix these two together, it's unstoppable. You get the cash you need to live today, while your wealth literally multiplies for tomorrow. Income rocket number 1, JP Morgan Nasdaq Equity Premium Income ETF, JEPQ. First on our list is JEPQ. This thing is an absolute monster. It takes the 100 biggest tech companies that basically run the world, the Nasdaq 100, and forces them to pay you a ridiculous amount of cash every month. How? It uses a crazy option strategy to generate income, which it hands straight to you. Now for the insane numbers, JEPQ has a fair 0.35% expense ratio. It's newer, started in May 2022, so no long-term history. But the main event is its dividend yield, which is a bonkers 10% to 11% a year. But here's the trade-off: that massive income has a price. To get it, the fund has to cap its own growth. So when tech stocks go to the moon, JEP won't capture all of that insane upside. But who cares when you're getting a paycheck that big every single month? Income rocket number 2, NEOS S&P 500 High Income ETF, SPYI. Our second income rocket is SPYI, and this one is wild. While JEPQ milks the tech index, SPYI does the exact same thing to the entire S&P 500. It holds all 500 stocks and uses that same covered call trick for a giant monthly payday. But the craziest part is that it's built for tax efficiency using special options, which could mean you keep way more of your money from the tax man. SPYI has a higher 0.68% expense ratio, and it's also new, launched in August 2000. But its distribution rate is why we're here, often hitting an unbelievable 11-12%. Just like JEPQ, you're swapping some explosive growth for a massive, reliable income stream. Income rocket number 3, iShares Preferred and Income Securities ETF, PFF. Our final income rocket is a totally different beast, PFF. Instead of normal stocks, PFF buys something called preferred stocks. Just think of them as VIP stocks, part stock, part bond. They pay a fixed steady dividend and their prices don't jump around like crazy. This fund's only goal is to give you a high-yield income stream with way less drama. PFF has an expense ratio of 0.45%. This isn't about explosive growth, it's about stability. Its dividend yield is super solid, usually sitting around 6%. The fund is filled with shares from huge financial companies you've heard of, like Wells Fargo and Bank of America. This ETF is for anyone who just wants a reliable check without the heart attacks. Alright, if you're getting some insane ideas for your portfolio, do me a 1-second favor and destroy that like button. It seriously helps the channel get this out to more people. Thanks. Now, let's get to the growth juggernauts. Growth juggernaut. Number 1, Schwab US Dividend Equity ETF, SCHD. It's time to shift from pure income to pure growth, and our first growth juggernaut is an absolute legend in the investing world, SCHD. SCHD's mission is not just to find companies paying you. It finds incredible companies that have a history of growing their dividend payments for at least 10 years straight. This focus on quality is why it's the foundation of so many millionaire portfolios. One of SCHD's best features is its practically zero expense ratio of just 0.06%. Over the last 5 and 10 years, it has delivered awesome average annual returns of about 8.9% and 11.5%. Its starting yield is more modest, around 3.6% to 3.8%. But the real magic is how the dividend itself grows. It's been growing around 9% over the last 5 years. This is the fun that quietly makes you rich in the background. Growth juggernaut number 2, Amplify CWP Enhanced Dividend Income ETF, DEVO. Our final ETF is DEVO, and this is the ultimate hybrid that captures this entire video's strategy. DEVO is an actively managed fund that attacks from 2 angles. First, it holds a hand-picked portfolio of 25 to 35 of the best dividend-growing companies on the planet. Second, just like our income rockets, it sells covered calls to create even more income. The huge difference is that DEVO does this while still trying to give you an amazing total return from growth. DEVO has a higher 0.56% expense ratio, but it's been a killer performer. It gives you a fat monthly dividend in the 4% to 5% range. It holds champions like Microsoft and Visa. DEVO is for the investor who wants the best of both worlds in one ETF. It gives you a way bigger monthly check than SCHD, but without giving up on that sweet long-term growth. Putting it all together, building the ultimate portfolio. So, you have the 5 ETFs. How do you actually build the portfolio? There is no single magic answer, but for a crazy balanced approach, you could try this. 40% in growth juggernauts, we're smashing this down the middle. 20% in SCHD for that unstoppable compounding growth, and 20% in DEVO for its hybrid model of growth and a fat monthly check. 60% in income rockets. This is your cash printing machine. Put 20% in GPQ for tech income, 20% in SPYI for S&P 500 income, and 20% in PFF for that super stable preferred stock income. With a setup like this, the majority of your portfolio is literally printing cash for you every single month, while a huge part of it is still aimed at massive long-term growth. We didn't choose. We took both. You never have to choose between income and growth again. By combining income printing machines with wealth-building growth juggernauts, you can create a portfolio that is tough in any market. You get the massive monthly cash flow from GPQ, SPYI, and PFF to pay your bills or reinvest to grow even faster. And you get the compounding power of SCHD and DEVO to build you insane wealth for years to come. This strategy gives you balance, it gives you income, and it gives you growth. What's your favorite dividend ETF? Did I list it? Drop the ticker in the comments below. I read every single one. And if you want more insane deep dives on building wealth, make sure you obliterate that subscribe button. Thanks for watching, and I'll see you in the next video.